I'm just getting us queued up for our live stream. For those of you who are joining us here on Zoom, we do encourage questions, and you'll be able to post them in the Q&A. And if you are watching live on Facebook or any of our other social media channels, you'll be able to post your questions, and one of our colleagues will bring those queries over to the Q&A here in Zoom. We'll be looking at those as we go through the webinar. And lastly, we will look at the chat before we close the session, but we'll be using the Q&A primarily for any questions that you might have. This is going to be a great session. My colleague Rachel is going to be actually leading this session. I'm just here to do a bit of an introduction. For those of you who aren't aware, CRA is in debt recovery mode, which means that they are actively pursuing all payments and obligations. So this is a really important webinar right now. And this is really going to guide you through the processes of how to actually make your CRA payments. So Rachel, thank you for joining us today and taking the lead on this webinar. I'm sure everyone's looking forward to all your amazing content. So I guess without further ado, I should let you take it over.
Okay, perfect. Thank you. Thank you so very much, Andrew. Greatly appreciate that. And here's the thing. I'm sure many individuals are familiar with making payments to CRA. However, we're just looking to give you a little bit of guidance to ensure that you're doing it properly. You also understand the implications of not making your payments to the Canada Revenue Agency on time, and as well, ways to be able to remedy if you've made payments to the wrong tax account. So we'll definitely dive through everything. And as Andrew did indicate earlier on, yes, CRA is trying to collect as much money as they can. I guess during COVID, there was a lot of expenses incurred. So they're in a debt recovery mode. Interest rates have gone up, have doubled. So it's quite substantial. So we really want to guide our clients to ensure that you're not, paying any unnecessary amount of money to CRA in any interest or any penalties. So again, we're really just here to guide you on how to make the payments to the various different CRA tax accounts. So going to go into a little bit in terms of who are we, okay? So of course, we are CPA 4IT, Chartered Professional Accounting Firm. So we have been in business for almost 40 years. So we have definitely been serving independent contractors for quite some time. We are also a member of many different governing bodies, such as the NACCB. We have also made it to the top 50 cloud accountants. And we are also ISO 9001 registered, which means that we have a very robust system and standards and process in terms of how we are executing the tax return preparation for our clients to make sure that, we are, ensuring accuracy of all tax filings for our clients. So just to dive in a little bit into what today's agenda is going to be about. So we are going to start off by touching up on the introduction, okay, a bit of an overview, if you want to call it, on the different tax CRA accounts. We're going to really give you that understanding of what the different tax accounts are. Okay, very important then, helping you to know the important payment deadlines for the various tax accounts, understanding the various payment methods which are out there, which are quite significant, and as well, making you aware of what the interests on any overdue accounts are, and then of course some of the common mistakes when making a payment, and then how to fix those, those common mistakes that individuals may encounter. So to dive on in, so we're going to first talk about, let me make sure I'm going through the right slide. Here we go. So we're going to first start off by diving into what are the different, or what's the overview of the different CRA accounts. Okay, my apologies. My slide seems to be, okay, here we go. I'm going a little too quick. Okay, perfect. So when we look at the overview of the different CRA accounts, for most individuals, you are aware that there are two main CRA account types. They are for the individuals and they are for the businesses. For the individual, there is really that one tax account, which is the personal income tax account. And your tax ID for that tax account is your social insurance number. So whenever you're making your payments, that's always what you're going to be referencing, because your social insurance number is your tax ID. But then for a business, you do have one business number assigned for your corporation. However, because there are a variety of different tax accounts associated to a business, there are different endings for said accounts. So some of the three primary tax accounts for businesses are the corporate income tax account, the GST-HST, so that is the goods and sales or the harmonized sales tax account, as well as the payroll account. Now, the ending for each of these tax accounts are different. And this is where we typically find a lot of mistakes are made when individuals are making payments. And I'm definitely going to walk you through, how to make sure that you're making the proper payment. But for the corporate income tax account, your actual ID is your business number and RC 0001. For your GST-HST, it's your business number and RT 0001. And then, of course, for the payroll, it is your business number and RP 0001. So I will dive into that a little bit more because it's really important to know the importance of the different endings for when you're making payments to the CRA as a business. So we're going to first dive into the easiest or the primary accounts that most individuals are aware of, which is for the personal income tax account. So when you're looking at the different payment types, again, there are a variety of payment types, but we're really going to stick to the core primary ones that most individuals might be familiar with. So some of them are the first one being the income tax T1 2023 tax return. So that's always for what we call the current tax year. So for the 2023 tax year, oh, my apologies. Give me 1 second. Let me just make sure that the recording is going on here. 1 second, guys. Okay, perfect. All right, so to continue, sorry about that. So yes, so for the personal income tax account, the primary one that most individuals are aware of is the current tax return, okay? So for individuals, of course, you are required to file as well as pay your taxes from a January 1st to a December 31st tax year, okay? And then, of course, for the due date for making any payments for your 2023 personal tax return, that is April 30th. So whenever you're making payments for your current 2023 personal tax year, it is very important that you are selecting the 2023 tax return payment type. The other type of a payment account is the income tax T1 amount owing. So that is typically for prior year's amounts owing. So for example, if you're late on filing your tax return and you're now doing a 2021 or 2022, we're hoping that's not the case. But if you're doing a late filing, if you're making a payment, you want to make that payment to the amount owing. If you've possibly been reassessed by CRA and there's an amount of money that you need to pay, there's an amount owing, you would also be making that payment to that payment type amount owing. Then there is also the installment payment. So this is also another payment type. So for most individuals, you may not necessarily be required to be making installment payments to CRA throughout the year. If you are an individual that is receiving a T4 slip, the rule of thumb is that under most circumstances, your taxes payable, your CPP and EI, if applicable, would be calculated to very close accuracy to the amount of money that is being paid to you as an employee. So which means that the amount remitted to CRA for your taxes owing should be relatively accurate. And you should have no more than maybe a few $100s, give or take, that you might have overpaid or underpaid, which will require payments when you're filing your tax return. And then, of course, if you have any different deductions that you're also including, then of course you will apply that under your personal tax return preparation, and then possibly get some income tax reduction there. But the installment payments are typically applied to individuals that are operating as a sole proprietorship, meaning that you are receiving that source income that, you're invoicing your client and you're receiving, hypothetically, let's say $100,000 that you're receiving personally, and there is no income tax withheld and being paid to CRA on your behalf. So as a result, when you file your personal income tax return, of course, after you've also included all of your different business-related deductions, whatever amount of money is owing, that again is also due by April 30th. So you tend to find that individuals operating as a sole proprietorship have that lump sum payment that they need to make to CRA when they're filing their tax return and due come April 30th. CRA, however, does have a rule of thumb when it comes to income taxes owing at a certain threshold. So what they would say is that if in any given personal income tax year, you have money owing to CRA in excess of $3,000, rather than them waiting for the next year to make that lump sum payment at the end of the year, they will ask you to make that payment in installments throughout the year. So for individuals that are operating as a sole proprietorship, CRA has set the quarterly due dates for that installment payment. So that is March 15th, June 15th, September 15th, and December 15th. Okay. So when you are operating as a sole proprietor and you're making those installment payments, again, it's very important that you are including that under the payment type for the installment payments. Now, if you don't make these installment payments as prescribed by CRA, they will charge you interest for late payment on that. So it is very important, if you're ever requested to make installment payments as a sole proprietor, that you are making this payment. The other type of payment types would include any benefits and credits repayment or any repayment of COVID-19 benefits. So those would typically be applicable for, again, so individuals who maybe received COVID-19 benefits and CRA has determined that you are not eligible for these benefits, you do need to make that repayment. And as well, same thing, if you have applied for any other tax benefits, GST, HST, different credits, and CRA has deemed that, you know, maybe upon an audit that you are no longer qualified for said benefits, if they do ask you to repay those benefits, again, it's very important that you are making those payments to the very specific payment type. And the due dates on these benefits are specified on the letter that CRA would provide to you. So if they've sent to you a letter and says, look, you need to repay X amount in, COVID-19 benefits, they will specify when this amount of money is due. Typically, it is approximately 30 days from the date of the letter, but we do tell clients it is very important that you are paying attention to when it indicates the date in that specific letter. Okay, so those are the typical personal income tax accounts and the different payment types that are applicable for all individuals. Now, when we look at from a business perspective, as we mentioned, there are a variety of different business accounts. So we're going to focus right now on the corporate income tax account. So for the corporate income tax, the different payment types are, of course, the T2 and the other one being the installment payment type. So unlike an individual tax return where all individuals are defaulted to that January-December calendar year, as you're aware, for a business, you're allowed to have a year-end date within a 53-week time frame of the date of incorporation. So corporations can have, or not can have year-ends any of the 12 months out of the year. So as a result, any money owing for your current income tax year, the payment is due 3 months after your year-end date. Now, this is the caveat when we're looking at the corporate income tax payments. In order for you to know how much money that you need to pay, you typically need to file your corporate tax returns. So although your corporate income tax return for the business is due 6 months after the year-end date, any payments owing to CRA is actually due 3 months after. So we do typically tell clients, try not to think about that 6-month time frame. Try and focus on that 3 months time frame so that you're able to provide your information to the accountant so that we can know how much money you owe to CRA so that you can make that payment in time by your 3-month deadline. Again, CRA has that threshold amount of income taxes payable, where they do indicate that if you owe in any given year over $3,000 to the Canada Revenue Agency for your corporate income tax account, they will ask you for monthly installments for the next tax year. Okay. And they will provide you the full details of how much you need to make in each of those 12-month installments. Now, if you, again, another one, if you don't make the installment payments when you are requested to, so you might say, you know what, I'm not going to make the installment payments. I'm just going to wait till the end of my next tax year and make that payments in a lump sum. Again, if you do that, CRA will charge you interest for any of the installment amount of money that was due that was unpaid. Okay. However, now this is where there's a bit of a caveat for individuals that may want to wait to file the corporate tax return after the 6-month deadline. If you know that you have made installment payments in a prior tax year and you feel confident that the installment payments are more than what you would potentially owe to CRA upon your 3-month payment deadline, then it is okay to wait till that 6-month deadline in order to be able to file the income tax return. Now, other situations where individuals may opt to not pay the installment payments, however, it is important for you to be able to really look at your situation and see whether or not you are required to. Because if in your subsequent year, it turns out, look, I did not make as much revenue as I did in my prior year, I don't think I'm going to owe the same amount of income taxes as I did in my prior year. You can choose to either stop the installment payment or you can choose to pay a lesser amount. If, for example, you are maybe out of a contract or you've gone back into full-time and you know, I'm not generating any income in my business, you can decide to forego and not make the installment payments. But if, throughout the year, maybe halfway through the year, you were not making any installment payments, but now you've secured a contract, then it is important that you now restart making that installment payment. So you don't necessarily need to catch up for all of the months that you may have missed, but at least just on a go-forward basis, continue on the installment payments, because CRA does look again at the end of the year to see, according to how much money that you did make, if it was less than what was in prior year, they will accept the installment payments and not charge you the interest. But then again, if it turns out that maybe the few months you stopped making the payments and, your income ended up being way more than maybe prior year and you opted not to restart the installment payment, then you will be hit with interest again. Okay, so when we're looking at the next tax account, okay, so that is for the GST HST account. So again, very similar. There are 2 types of payments that you need to make. It's always the remittance due. So that's always based on current due. And then there is also for the GST HST installment payment. So again, very much same rule of thumb. In this particular case, however, for the GST HST, any payments due are due 3 months after your year-end date or 1 month after your year-end date if it turns out if you're making the payment, if you're on a quarterly or if you're on a monthly GST HST remittance. So again, not something we necessarily advise for our clients to be on as rigorous as a monthly or quarterly filing, I should say, my apologies, filing for your GST HST. You're only mandated to have a quarterly filing for your GST HST if you're making over $3 million. So the reality is if you're under that threshold, we do advise clients to be on an annual GST HST filing. So the payments are due 3 months from that annual filing deadline, and as well the GST HST filing is also due at that same 3-month time frame. Okay. Of course, if you don't make the payment and if you don't have the filing done within 3-month time frame, CRA will charge you again that interest. We're trying to make sure that clients are avoiding, paying any unnecessary money to CRA in interest or penalties. And for the GST HST installment, again, they have the same installment threshold of $3,000 annual. So if you are required in any given tax year to pay more than $3,000 to your GST HST account on the subsequent tax year, CRA will ask you for quarterly payments. Okay, so it is really important that individuals be aware of the deadlines for the filing as well as the due dates for the installment payments. The next tax account we're going to touch upon is the payroll account. So this one, it's very it's a bit of a tricky account when it comes to when you make your payments and when your different due dates are, because individuals can choose when and how often, the frequency of how often they're going to be making their source deduction remittance, which is again that CPP and income tax and EI, if applicable for the business or for some employees. You can choose how often you want to be making that remittance. Some individuals can choose to be doing the remittance on a monthly basis. Again, not something that we typically advise for our clients, because it really does limit a little bit of the different personal tax planning strategies that we can provide for clients when you are making that payment or that remittance on a monthly basis. If you are making that on a monthly basis, the payment due date is the 15th day of the next month. Okay. For the majority of our clients, what we advise our clients to do is take what we call director's advances throughout the year. So take as much money as you see fit that you need to live on throughout the year. Okay. And you're making sure that you're tracking whatever amount of money that you're taking out throughout the year for your personal use. And at the end of the year, we look at the sum of director's advances and how much of that money is actually going to be deemed as personal income to you and or other family members. And when we do that personal tax planning, that's normally in the November, December timeframe. And that's when we look and see, okay, what is the total amount of money that we're going to declare as income to the individuals from the corporation? And the payment amount, it's at that point in time we calculate what the CPP and the income taxes are, and again, EI if applicable. We do that calculation of what that total source deduction is, and then we will indicate to you when is your remittance due date. So if the total amount of source deductions, so that is your CPP, your income taxes, and EI if applicable, if that amount is between $25,000 and just under $100,000, you are required to remit that payment for the period ending of December 31st by January 10th. And that's what we call the accelerated remittance threshold 1 type. If, however, the amount of, again, source deductions, which is the CPP taxes and EI, if applicable, is over 100,000, between 100,000 and above, anything over that, then your pay period for the period ending December 31st will actually be due by January 3rd. And that is called the accelerated remitter threshold 2. So this is something that we definitely give our guidance to our clients based on, again, how much money you've taken out from the corporation, what is your total source deduction, and we will give you that guidance on how much to pay and when your specific payment deadline is based on the amount. Okay, so those are, again, the top 4, my apologies, the top 3 CRA account types for businesses. Now, once we've identified, okay, these are the different types, we are aware of when you need to make these payments. Now we're going to touch upon the overview of the CRA payment options. Now, CRA has provided a variety of different payment options for individuals. Okay, so some of the payments that you can do are online, where you can either do that through online banking, through My Payment, or you can do pre-authorized debit. So essentially what you would do is that you could, for example, log on to your corporate bank account online, your financial institution, and again, you would select the various payment types based on your situation. So again, the payment type, if you're making for corporate income tax, GST, HST, if it's for amount due, or if it's for an installment. So you can make these payments online. Now, typically, when you're making the payments online, it's very important to know that these financial institutions have processing timelines. For most CRA payments, it takes approximately 3 business days for these payment types to be posted to your CRA account. So we never advise clients to try and make the payment the day of or the day before, because the financial institution does need time in order to be able to process it and for that to be posted if CRA's account. So if, for example, today's April 30th and you're deciding you're making your payment for today, I can guarantee you that that payment will be posted to the Canada Revenue Agency site sometime in May, and hence that payment would be considered to be late. The other option is that you can pay by credit card, PayPal, or Interact e-transfers. So those are options. So for some of the clients that are thinking, I'm going to get some, some points, some credit card points by making my payments to CRA. That is an option. However, they do charge you some processing fees, and sometimes the fees can be quite substantial. They might charge a percentage of the amount of payment that you're making, a percentage charge. So that can actually end up costing you a little bit more and may not necessarily be the best option for you. There are also the option to use third-party service providers. So some of those would include anything from, let's say, there's Wave Accounting, there might be ADP. Now, very important to know, however, in regards to the third-party service providers, they do not accept or they do not process payments for all the different CRA account types. So for the majority of them, they only allow CRA payments for payroll accounts, because, for example, if you're using an ADP or if you're using Wave Payroll, they will only allow to make that payment to CRA for your payroll account. You would not be able to make, let's say, for example, a GST HST installment payment through them or corporate income tax payments through them. So it does limit the different type of payments that you can make. And again, they do have their service charges that they do add on when you're using their platform for the payment. The other option as well is paying in person. So a very outdated way of making payments, but it is an option for you. You can make that payment through your financial institution. However, individuals that are making payments in person, you typically have to contact CRA and ask CRA to mail you a remittance voucher in order to be able to make that payment. And to be quite honest with you, CRA is slowly weaning out these different options because they prefer everything being done in some form of electronic format. But you can go to your financial institution and provide them the voucher, or you can also go to the Canada Post and make that payment there. Another option rarely utilized is also, again, making a payment via a wire transfer. Again, so you're going to be looking at wire fees for that. And the wire payment is not always the best option, because although you may have your fees that you're paying to send the wire, sometimes the incoming financial institution does, claw back a few dollars for them processing the wire. So you might be thinking, I am making the exact payment due to CRA, but what CRA actually receives might be a little bit less because the incoming wire fee would be applied. The most individuals that use the wire payment options are maybe non-residents that are filing, that have non-resident payments to be made to CRA. So it's, again, not very popular. And again, another very unpopular method is to pay via check. So the snail mail option of mailing your payment to CRA. Now, that's another one which it's very, again, why we don't advise this for clients. Don't advise it for installment payments, where sometimes clients may prefer to send post-dated checks, installment payments. The issue with this is that there's really no way to track how long it takes to get to CRA and how long it takes for them to be able to process, open the mail, and apply the payment to your account. So that's not a very good option that we advise for our clients. So I do have a question that came in here. So the question says, if I have previously paid payroll installments monthly, and this year due to CPFYT's guidance, I should stop. Do I have to let CRA know, or do I just stop making installment payments? Okay, so for payroll in particular, you don't just stop. especially if you know that, for example, you're going from a monthly installment to possibly wanting to do an annual remittance to CRA. The only times you can really just stop is if you know, okay, for example, again, for income tax or GST, HST, if you know, I am no longer generating income in the business and I am just going to stop the installments, because when you file your tax returns, CRA will see that, okay, there was no income, so there were no installment that were due, there is no implication. But for payroll in particular, if you just stop, but then you know you are planning to pay yourself the same amount of money from your corporation to yourself, but instead you want to make that lump sum at the end of the year, CRA is not necessarily just going to allow the stopping of the payment and to transition to annual. Now, I will admit, our perspective with our clients when you're making payments to CRAs, we prefer to give you what is the best option available for you. CRA, on the other hand, might be a little bit greedy, and they might say, we don't want you to be making annual payments for your source deduction. We prefer to have it on a monthly basis. So there are certain instances where CRA will not actually allow you to transition from a monthly to a yearly payment type for the payroll. We definitely have seen that. So sometimes what we do for our clients is we do a bit of a compromise where we say, okay, if CRA may not necessarily allow you to completely change from a monthly to an annual, we will instead have your monthly remittance be a lesser amount on a monthly basis, and then we will top up for you at the end of the year when we do your tax planning for you. But this is something that we'd want to discuss with you one-on-one to be able to determine what's the best option. But we do try to make that switch from a monthly to an annual on your behalf. So next question. At times, I have lost the HST remittance form mailed to me. That seems to stop the ability to pay at the bank or through one's account. I shouldn't lose CRA mail, but it seems to cause real difficulties. Well, John, essentially, here's the thing. CRA is making it difficult for individuals to make that in-person payment at a financial institution because they are trying to wean that out. Back in the day, they would always mail individuals their voucher automatically. Now they're requesting individuals to call in to get the voucher to then make that payment. That's why the only second best option for you is to actually make that payment still through your financial institution, but rather going into the bank. You can do that online. So you can actually add CRA as a bill payer through, just like how, for example, you have other bills that you pay directly from your bank account. You can add CRA and your HST or your corporate income tax, your different accounts, add it as a bill payer, and you can log online and then make that payment directly through your financial institution online. But yes, is it causing difficulties? It definitely is. And CRA is making it more difficult because they want to be receiving those payments in that electronic format. Sometimes what you might want to do, maybe it's possible if you want to make a copy of the voucher. Again, I know sometimes back in the day, the different financial institutions would not accept a photocopy. They want the actual voucher. So if you know that you prefer this method type, it is going to be imperative that you make sure that you are keeping that. Now, again, even from the perspective of CRA mail, CRA is also phasing out sending mail and having individuals access their CRA mail online. So even if you're trying to rely on keeping the mail, again, this is going to be an option that's going to be completely phased out. Okay. All right. So moving on. Let's just go on. So the next thing we're going to talk about here is the interest on overdue accounts. Now, this is, again, very important to note that if you do not make your payments to CRA by the very specific due dates, they will charge you interest on any amounts of money owing. And CRA has sharply this year increased the interest amounts. It used to be 5%. They've now doubled them. So they're now 10%. So for all tax accounts, for the personal income tax, for the corporate, the GST, HST, and the payroll, if you are making any of your payments to CRA, and these payments are received late, they will charge you that 10% interest for any overdue accounts. Now, what's very important to note as well is that there's a difference between interests and penalties. Most people use them interchangeably, interest penalties, assuming it's one and the same, but it's not necessarily the case. Interest is for money owing. So they're penalizing you. They're adding on that additional amount of money that you need to pay for any monies owing to CRA. However, penalties can be added on if you are late in your filing of your various tax accounts. So for example, if you have your personal tax year end is again December 31st, you have that 4-month grace period by April 30th to make sure that you're filing your tax return and making any payments to CRA for money owing. If you have filed your tax return on time by that April 30th deadline, however, you have failed to make the payment on time, CRA will only charge you 10% interest on that overdue payment. However, if it turns out that you have neglected to file your tax return by the due date and you are owing money, then CRA will charge the 10% interest on the money owing, and then they will apply a penalty for that late filing. So the penalties are really associated to the late filing. Now, some individuals also think, well, I have made my payment to CRA. I have nothing owing to CRA, but I just have not filed my income taxes. Or for example, you might say, I have paid, made installment payments. So I know my installment payments are exceeding any amount of money owing. I just haven't filed. So yes, you will have no interest to pay. However, CRA has in the past applied what they call arbitrary penalties on late filing. So for example, for individuals or for corporations, if you have filed your corporate or your personal tax return 3 years in a row consecutively late, they can ascribe an arbitrary late filing penalty. So that's why for our clients, we always urge, it is so important to file on time. We understand that you may not necessarily owe, but it is really still important that you're filing on time, because even if there's no money owing, CRA can still apply that penalty. So again, we're trying our best to ensure that our clients are not making any additional undue payments to CRA unnecessarily. Okay, so next we're going to touch up on the common mistakes that individuals make and how to be able to fix said common mistakes. Okay, so this is actually very important, because the common mistakes that individuals can encounter sometimes can be the silliest of mistakes. So for example, an individual might, when they're making their taxes payments to CRA, rather than selecting their installments, so let's say we're talking about you're required to make installment payments for the January to December 2024 personal tax year, rather than selecting the personal tax installment option, they make that payment under the taxes owing. So what happens in these particular situations is that CRA has very specific year cutoff for each of your tax accounts. And this also happens very often for businesses as well, where we will say, okay, you need to make, again, installment payments, but instead you make it in payments due. And then CRA will come and say, you've made payments in, for example, your 2024 personal tax year, but you still owe us this lump sum for 2023. I know it sounds so silly. You might say, well, I paid you. How is it that it's sitting in a different account or a different year? Or again, for businesses, it can be sitting in a complete different tax account. So you are required to make your income tax payments, but you accidentally make that payment into your GST HST account. So from CRA's perspective, this income tax account is still outstanding and it is still owing, and they don't care about any monies sitting in any other tax accounts, okay? And then what will happen is that they will start to charge interest because, again, there is money owing in that particular tax account or in a specific tax year. So it is really important that when you're making the payment that you are selecting the proper payment type so that the payment goes in the applicable tax year, and that you are also selecting the proper account when it comes to the corporation. Now, in order to be able to remedy these things, which it is a very simple remedy, is that you just need to contact CRA and ask CRA to transfer the payment. What we don't want you to do is to make another payment in that specific tax account, and then CRA is going to accept that payment as of current date. That's when it's applied. And then that means that all interest that has accumulated, you also have that amount owing. But if you know, again, for example, that you made that payment in, let's say, March, and you're finding out today that it's in a different tax account, you're going to call them and ask them to transfer the payment to the appropriate tax account. When they make that transfer, they will honor the date that they received that payment. So even if they're transferring it as of today in April, that's not going to be posted in that account, that tax account in April. They're going to acknowledge the posted date of whenever that was in March and make that transfer. And then any interest that they would have applied, they will waive that interest. So it's a very common mistake. And, many times we've heard clients, call us and ask, well, why are they saying I owe money? I made the payment. Here is the payment I made, but not realizing that the payment is sitting in a different tax account. And it's just a matter of calling CRA and just asking them to transfer it to the appropriate account. So you can make these transfers within the corporation. If, for example, from your corporate account to your GST, HST, your payroll, or for the different years, that you can do. What you cannot do is ask for a transfer from, let's say, for example, a corporate account over to a personal account. That you cannot do because, again, there are different tax IDs for each of these payments. So again, very common mistake. However, very easily remedied to be able to get that, that sorted. Okay, so we've gone through the entirety in terms of the information pertaining to today's session about how to make the payments. Okay, so again, really just important to note that the main CRA accounts are both the individual and the business, and very important for clients to have that understanding that within the business, there are different tax accounts, okay, for the income tax, the payroll, GST, HST. So it is very important that you are making that payment to the applicable accounts. For us, with our clients, once we complete your end of year tax return, we always provide you that guidance on how to make that payment. For the corporation in particular, we do provide you your checklist, and we're very specific with the amount that you need to pay, what the tax ID is. So again, the business number and the different ending. If you're required to make any GST, HST, or corporate installments, we're very specific with our clients. We give you the specific deadline, and we give you the specific, the specific amount and the specific due date. So we do provide everything for you to be able to help you. So now we have a couple of questions that have come through. Let's go to these questions. So here is a question. If I have money owing, it's about $2 in a tax account from years ago, what year do I apply the payment to? So if you know what year it is, so in this particular situation, that $2 is going to show as outstanding, and CRA is maybe going to be adding there, even if it's 1 penny interest, that money is outstanding. So if you're trying to make the payment, let's say through your financial institution, you may not be able to specifically say, okay, well, I want to make this payment for, the 2021 tax year. What you can do is you can just make that payment to your income tax due. And what you can do is that when you log onto your CRA account, you can see under what tax account CRA has that money sitting in. And you can then call CRA and ask CRA, hey, I made this payment. It is sitting under my, my 2022 personal tax year. Can you please transfer that payment to my 2021 tax year? So that might be the best option if you have, that money owing for quite some time ago and you want to ensure that it is being applied to the appropriate accounts, because again, electronically, it would not necessarily automatically do that since it's such an outstanding an amount. The next question. Can I ask to transfer that amount owing my card? Can I ask to transfer that amount? Using my card, no one account for CRA. I'm so sorry. I know this came from an anonymous attendee. I don't think I understand. Can I ask to transfer that amount using my card, no one account for CRA? Yeah, if you don't mind, I'm going to ask you if you can please retype that. I'm really not too sure what you're trying to inquire here. This message is from this question from Peter. Hi, Peter. Hi, Rachel. Thanks for the overdue date. I'm in a scenario where my spouse came up more than 5,000 short on her source deduction payment back in September of 2023 last year. I plan on paying that owed balance prior to April 30th, and her tax return is ready to file with your firm. From your perspective, should I apply this to the CRA revenue 2023 tax return payee or CRA tax amount owing payee in her? Okay. So if you are going to make that payment, you want to make that payment to the 2023. So essentially and I'll explain a little bit on the source deduction and the payment. So we are aware that sometimes clients may be a little bit late on making the payments for the source deduction. Now, we always look at different ways to remedy or to minimize your interest or your taxes payable to CRA. So what that means I'll give you an example. So let's say we told a client, okay, you need to pay, $10,000 for your source deduction January 10th, and you forgot to make the payment. So then that means CRA is going to charge 10% interest on that full $7,000 owing. So instead, what we do to be able to minimize that interest, what we advise clients to do is we will provide you with only the CPP employer-employee amount, the maximum, well, of course, based on the income. And we will ask you to only make that CPP payment in January for the source deduction, and the actual income tax amount to wait to pay that in April. So what that will mean is that now, rather than potentially be paying 10% on $7,000, you're really possibly paying 10% on, let's say, $5,000, okay? And then that source deduction, which is the actual income tax amount that you did not remit in January, then that means the individual does have to make that full payment by April 30th. So it is imperative that that payment be made by April 30th. And you are going to use the 2023 taxes, because essentially that is the amount of income taxes owing for the 2023 tax year for that individual. So Peter, that's what you're going to select. Okay, we have quite a few questions coming in, which is great. Next question. Thank you for the very valuable information. Okay, you are most welcome. So this question is coming from YouTube. Thank you very much. And I have Peterson. Thank you very much. So I guess quite a few questions, really comments coming through with individuals thanking us from Calgary. Thank you very much. I do appreciate that. So yes, so I hope I was able to really provide a little bit of guidance again I know for individuals that have been self-employed for quite some time. You may be very aware of the payments, not necessarily on all the different options that CRA has now available. But again, since earlier on this year, when CRA has doubled the interest due or the interest owing or for overdue payments, we really want to help our clients as much as possible to ensure that you are not paying that amount. I mean, we also do know sometimes, life happens and clients are a little bit late on their bookkeeping or different things to be able to get their tax returns completed in time. What we like to at least do for our clients is to have an idea of approximately how much income that you've generated, approximately your expenses. So at least we can give you some estimate of money to pay to CRA. And a lot of time when we give those estimates to our clients, we like to give a good, higher estimate of payments. So that way, if it turns out that, you've paid more in the estimate that we've provided than how much money you're actually going to owe to CRA, then that's great. All that means is once you've completed a tax return, you're going to get that money refunded. If it turns out that, okay, we've given you an estimate, but the estimate is, isn't exceeding the amount of money that you're going to be owing. But even if it means that leaves a much smaller amount owing, then guess what? You only have interest payable on a lesser amount. Okay. But again, the rule of thumb we always advise for clients, make those payments on time. And again, especially for individuals, let me just take a look this year. When is April 30th? So the April 30th is, okay, so that's going to be on a Tuesday, okay, this year. So which means that anybody, if you have any monies owing, you don't want to be making that payment over the weekend or on the Monday, because there's a likelihood that it will not be posted come April 30th, which is on a Tuesday. And that's why for a lot of our clients, we advise try to bring in your information as quickly as possible. Let us provide you the amount of money owing if applicable. So, you have more than enough time to make that payment and not have to pay any additional interest to CRA. So we would like to thank everybody. A few more messages coming in with some thank yous. So again, I'd like to thank everybody for coming out to today's session. We will also be posting this. Well, of course, this is going to be on our YouTube as well as on our different streaming platforms. And if you are looking for some help in terms of your personal tax return preparation, we're always here that you can reach out to us. So again, thank you, everybody. Really appreciate you joining us today. Have yourself a wonderful day. Bye-bye.